All right, guys. So we are going to talk about the algo structure. Algo structure. All right. But before I do, let's have one more example using a premium and a discounted entry. All right. So over here, you can see on the H4, this was the last low. All right. This was the last low, the higher low that created this. So you can see that was still price is bullish, right? The reason why I was still looking for a buy is because of what this is acting as a complex pullback, right? Or this is acting as a complex pullback. And on the daily time frame too, you can see it's also very bullish, right? You can see price respecting this what order block over here, right? Took liquidity before it's pushing to the upside. Okay. So the same thing over here. If we use your Fibonacci from this low to this high, from this low over here, right, to this high, because this is our higher low, higher high, higher low. So before price will create a new higher high, price need to do what? To make a reduction or depreciate itself towards a discounted price, which is the 61, between the 61 and the 78. Price need to do it to come back there before what? Continuing the trend. Keep that in mind. Before price will what? Continue its higher high, price need to do what? To take some rest, right? Before what? Continuing the journey again. I get it. That's why we had this over here. You can see higher low, higher high, higher high. Price need to form new what? Higher low before possibly what? Forming new higher high, right? So how would you get your entry points? You are going to use your discounted what? Fibonacci. Okay. So we are going to use our discounted fib from this low to this high. Right now, we'll mark this place as our what? Our discounted price, right? This place is where we are going to mark. Then what do we need to do? We need to start looking for what? Entry model. We have our Fibonacci, we have breaker, we have order block entry, we have inefficiency entries also as well. So this the time you start looking for those entry model, right? So over here you're going to always look at the left hand side. You're going to focus on this leg over here. You start to read money transfer and other stuffs, right? So you ask yourself, over here, what do you see? Where is the money line? Right? Where is the money line? You can see we had this inefficiency over here. So this inefficiency is the last what? Is the last bullish candle, right? The last candle that broke the structure. And say this inefficiency candle broke structure. So it becomes what? A strong what? Structure or a strong inefficiency candle for us or points. So within every inefficiency, we have what? 100% and the 50%. So let me show you how to mark. I have an indicator which I've shared with you guys already, right? This over. So this indicator does all the work for me, right? And see it has marked this inefficiency for me. Let's mark this inefficiency for me. So this the 100%, this is the 0%. So now what you need to do is what? You just need to mark your 50%. And how do you do that? You use the game box, right? Use the game box. So from what? From the 100 to the 0%, just drag it over there, right? Now you can take, since you have identified your point of interest, you can take out your Fibonacci and your discounted markup, right? You just have to keep it clean. So right now, this is where you are going to focus at. This is where you are going to focus at. This over here. Okay, good. Right now, you don't know where price is going to do it to respect. You don't know where that price is going to respect the 50% or what, or the 100%. That's where the sweat comes in. Are you getting it? That's when the sweat comes in, because if you enter at the 50%, if you enter the 50%, the stop loss will be bigger. Let's see. Enter the 50%, you can see 37 pips. That's the 50%. Good. And if you enter the 100%, 16 pips is also big, right? So what do? You are going to refine this place that you have marked over here. You are going to what? Refine this over here. So you move towards the H1 time frame. You can choose to move from the H4, H2, H1, then you scroll down to the smaller time frame. All right. On the H2, you can see we have something clear and nice over here, right? On the H2, check what we found over here. H2, you can see we identify what's a nice order block over here. So right now we are going to refine this point of interest to this order block. And sometimes what I've realized is when you have order block and inefficiency at the same time, what happens is price will play the inefficiency first, which is what it will play the 50% first, but that'll be a ping pong what trade for you, not something that you're going to hold for long, right? So you can see price playing what the 50% first, right? Then over here you can see a bigger time frame what order block, also a bigger time for order block. So this should be a nice place for you to take a profit and look forward another sell. So this is how to do the ping pong, right? To look forward another sell over here, right? So what to the other block, right? Good. So over here you'll be able to leverage on these moves, catching from buys to sell, then continuation of the main buy, right? Because what we have this bigger time frame order block, which is going to reverse price for you, right? So put it down. When you have order block and inefficiency at the same time, what happens? Price will play 50% of the inefficiency first, then it will lure you. A lot of smart money traders don't know this, so they'll be holding this over all of it, thinking that price is going to overextend itself, right? Form a new higher from here, then quickly you see price taking them out, right? Before price will start going in our favor, right? It's very painful, right? So whenever you see something like this, you have to know price is going to play this first, then play this one also, right? Good. So you can see on the H2, we have a nice order block. This is the last what bullish candle that was created this impulsive movement to the upside, right? We had a break of structure. Price move aggressively, right? Always price should move aggressively. That's one way to identify what's a valid order block, right? Good. So this place becomes our refinement, right? So let's check the if it's huge, you can still what refine it. So you can see 26 is also huge. So you keep what's refining again. All right. Over here, you can see how this breakup. Good. So we had a breaker block over here. In pair with what inefficiency, another block, right? You had this other block over here, and what's a breaker block over here, right? So this is how you are going to draw your PY. But you ask yourself, if you draw it like this, where would your stop loss be? Are you getting it? Where would your stop loss be? Because all of this is another block. Price can choose to what? Play this and go. Price can choose to do what? Play here 100% and go, right? Within another block, price can play anywhere. Can play the opening, can play the 50%, can play the 100% and go. I get it. That's why always you have to give your SL some briefing what space, at least a pip, right? Okay. So we'll move from the H1 to the 15 minutes time frame, right? H1 to the 15 minutes time frame. Okay. So most of the time, what I like to say is, I know we have our 50% here, right? It should match with what? A resistance or a support. You can see we have what? This support over here, right? And see we have this support over here, right? We have a nice support over here. Good. You can see this is your fill QM. So this is our QM, field order block, right? It's our field order block aligning with what our order block and what's our inefficiency. So this zone becomes a strong what place for price to do what? To react or to respect, right? So you can either take the aggressive entry over here, right? And sometimes you know the aggressive entries, it gives us a bigger stop loss than what the retest entry, right? So on the 15 minutes, we have this, but still price can choose to play this, which is going to make our stop loss what's also bigger. So you can keep what's refining. Let me show you guys how I do my charts. What I do is what I use the replay tool over here to send the chart back so that I'll be able to do what? Refine that left zone well before what? I'll move it back to where price is. Are you guys getting it? So you can still see that on the 5 minutes. We have this huge what? inefficiency, which is too much, right? It's too much for us. So I think we just have an observative entry when price tap inside this POI, or you just take, let's check here, one. All right, good. So in the 1 minute, you can see we have this nice order block over here. In the 1 minute, it matches with the bigger time frame stuff, so it becomes a nice order block for us to use. Right. As I say, if you move to the 30 seconds, let's try the 30 seconds. When you do that. And because of the history of it, it's been a long time. So guys, and so you can back test it and see. So we have this is the 1 minute order block, right? So, okay, good. I think the 1 minute is okay. We can manage that one. So 50%, I think is again here, right? So we can see on the 1 minute price came to do what? To mitigate the 50%. Our stop loss is what? Only 4 pip stop loss, right? 4 pip stop loss. And when you get your what? Your 1 minute refined entry aligned with a bigger time frame what entry, then you can then target your bigger time frame what take profit, right? You can target your bigger time frame profit, maybe a new high or something like that, right? But always, we take profits at the next what higher high or the previous high or low, right? You can see prices tap inside this UI or limits over here, which is 4 pip stop loss, sorry, 5. The risk to go 1 is to 57, right? Very, very nice one. You can see price what's pushing all the way to the upside. So let's say, assuming you miss this over here and you want to catch this over here, maybe a retest entry, right? You can see price move really, really aggressively past this over here, right? So there's no way you should be expecting price to move all the way down to this place, right? There's no way you should be expecting this because you can see the momentum at which price broke the structure, right? So over here, this way, sometimes price plays the breaker, right? Price plays the breaker. So over here, you can see price was playing this zone over here. We had this SNR over here and this support and resistance over here, right? Price give them some hope of what price pushing to the upside, and boom, induce all of them, right? Price induce all of them and played what the 100% of this what inefficiency, right? Price played 100% of this inefficiency over here. So right now price has what gotten a fuel in the form of liquidity to fall or to push price to the upside. Right, a very nice one. So that's it for this. Then look at what happened here. Price came back to retest this zone afterwards, taking out this high, right? After taking out this high, price then came down. You can see the number of days it took or hours before price returned to this point of interest over here. That's why they say what, no matter how order block can be created today and it will leave it, and it can take years, even a year, 2 years, 3 months, 1 month before price will return to the order block to mitigate it, right? And when price come there, so far as there's money lying there, price is going to what, respect that order block unless the momentum or the structure or the trend has changed against that order block, right? But if that order block is in confirmation with a bigger time frame, structure or direction, then it will what, still respect it, right? I'll show you guys an example. This is one example over here. You can see we had a stop hands. We had a stop hands. Then price created this what, order block over here, right? Price created this order block over here. You can see we are on the 1 hour time frame. It took a lot, so many hours before it, more than 3 days, more than 4 days before its price eventually what, return back to what, to mitigate this order block before it's pushing to the upside, right? Okay, so let me quickly explain this. And I have, let's dive into the algo structure. So you guys can take a screenshot of this, right? You guys can take a screenshot of this. It's for the bullish trend structure, right? So you can see price forming higher high, higher low, higher high. Then what, price want to do it, to drink some water, right? Price want to take some rest before what, continuing it what, uptrend again, right? I told you guys before price will form a new higher high, it need to form a new higher low first before it can continue to form that new higher high. So that's basically what it's doing over here. But this on the bigger time frame is one move, right? This on the H4 is just a move. But on the smaller time frame, it was a trend on its own. So you can say on H4 is bullish, but on M15 is bearish. Are you guys getting it? That's the concept. So and on 15 minutes, you can see price is what, forming a lot of what, lower highs and lower lows. So it's forming series of what, lower highs and lower lows. But on the H4, look at what happened. Price is very, very bullish. You can see high, low, high. So it's just what, one move, just one impulsive move. You can see. But check the M15. Look at what happened. A lot of what, lower highs and lower lows. formed. Right. So when you are able to identify the differences and time and price correlation with time frame, then you are going to have the direction of the market are going to be, it's going to be easy for you to identify the direction of the market, right? So over here, you can see this is the Asia range over here. This is the Asia range. This is the London section box. This is the New York section box as well. So I'll walk you guys through this and you guys can back test it. It plays a lot. It plays. This is not the only pattern. We have, come, let me share mine. Can you guys see my screen? Okay. So there's the H4 impulsive move. There's the 15 minutes what price moving in the opposite leg to form what the new higher low for the trend continuation. So what you do is what just play the intraday, right, inside this leg and continue your buy to the upside, right? So already you know the direction because of what, just the market structure. You know the direction just because of what, this simple market structure. All right. So over here, let's see what happened. All right. So you can see price what form. We had this, higher high. Price failed to do it to create new high. Broke. This was the last what higher low that created this higher high. And what happened? We had a break of structure over here, right? So in the 50 minutes, we had price transitioning from what, a bullish market to a bearish market. I get it. On the 50 minutes, we had price transitioning from a bullish to a bearish market. Then what happened? We had this inefficiency over here, which price went up to mitigate, right? On the lower time frame, you don't have to always be expecting price to mitigate what exactly 50% or 100%. Price can what choose to just mitigate the opening, right? When it take liquidity from this candle, that is it. But the reason why this played out is because of this we had over here. Let me show you some trick. You can use a game box from here to here. Right, so you can see we had this order block over here, right? So we had a failed order block over here is another block structure. So a lot of people are expecting a buy from here. I can see break. So it's like what? A break and a retest. So SNR right over here. Right. Okay. So we had money transfer. We had money transfer from this inefficiency to this other block. So this where money is. And now what happened? Over here, we had a break of what? This minor structure over here, right? A break of this minor structure. Price went back to mitigate this other block. So we had money transfer from this other block to this place now. So this how to work the chart to know candle by candle where money is in the market. So right now you know that what money is not here, and again money is here. It has been transferred from here to this place. Right now we had this aggressive break of market structure, right? And this what happened. Price went back up to fill this what inefficiency. So you can see we had this breaker over here aligned with the inefficiency. That's why what price mitigated this. On the bigger time frame, you can see it's another block. So you don't need to stress yourself. You just have to correlate what the time frames together, right? You don't have to focus or be on one time frame, smaller time frame. Work with a bigger time frame. So on the 25 minutes, you can see this another block, or this is another block. So anything within here, price has mitigated. That's why on the 15 minutes, price just what played this inefficiency over here, and price started what dropping to the downside, right? So after price mitigating this other block, we had money transferred from this other block to this other block. So if you verify this without taking the bigger time frame into your mind, then you are going to miss this and you'll be like, what's this? The other block, why didn't price come back to this place, right? You are going to miss it. You'll be expecting price to do it, to push all the way here before it's no. That's how the children they do their refinements. You have grown past that level, right? All right. So we had money transfer from here to this place. You can see price break the structure aggressively. So we had another break of structure aggressively, right? We have 1 minute. When it ends, you guys can jump back and we'll finish our 3 hours. Sorry. All right, so we had this aggressive break of market structure, other block over here, right? Again, so it becomes what? Valid again. It becomes what? Valid again. Good. To confirm this is what I do most of the times. I use the previous higher low as my starting point A to point B. This over here becomes my complex, right? Because on the bigger time frame, that's how it's going to look, right? So I place it from here